Hey, good morning, good afternoon, everybody. Starting in a minute or two, getting a couple more people into the room. We also have some economic numbers coming out literally in 3 seconds. So give me a second, let me digest, and we'll be right back into the room. Thanks. Okay, let's get going. Hi, everybody. How you doing today? Hang on a second. Let me share my screen with you. Oops. Hang on. I'm going to do a new share. Okay, guys, see my charts now? Okay, good. Okay, excellent. Uh, New home sales, existing home sales just came out weak. Uh, U.S. leading economic indicators month over month for March came in weaker, much weaker than expected. Uh, Welcome to the market of your guesses as good as mine. For right this second, first thing I want to do is let's go back and take a quick look at the trade I put on yesterday and show you how how I managed it and what I did. So, if you recall yesterday, I was on the 4 hour chart, and we were doing as we were talking about a short. Okay. Remember, I thought that the high of the week was in, and I was correct, or at least to that point in time, I was correct. I had put some shorts on. What I didn't like, and as the day wore on, the markets have had a tendency, the US markets have had a tendency to just grind higher in the second half of the day. And so what was happening yesterday, if you go back and you look at the 1 hour chart and you go back to yesterday, look at what how the day went. Okay, we were short. Remember, we had identified the high of the week. Okay, go back over here. That was never really in play, even though we got short over here. Remember, I didn't love the particular area that I got short at. It wasn't ideal, but we were looking to put a trade on. And I said it was over a 50% risk reward ratio. So that worked out okay. And the trade was never really in risk, although it was down. It was not heavily in risk. It never came close to taking out the high of the week. So there was no issue as far as that was concerned. But I didn't like this trading that went on yesterday. So you see, once again, it made its move down. And then middle of the day and then towards the end, it just ramped up again and ramped up and ramped up. Um, this is not a very good pattern for me. And so therefore, when it came down, and I stayed in it, and I stayed in it overnight, and that was fine. And then when I got up earlier this morning, about 5:30 New York time, I was down kind of around in this area. And I was looking at it, it was yesterday's lows. We couldn't get through this area. I had some small profits finally after being down on the position for most of the time. I did have some small profits, which I'll show you kind of right down here on both little positions. And so at 5:30 this morning, and as you can see, what time did I get out? At 12:19, 12:20. So that was 5:19 and 5:20 a.m. this morning. I saw this activity going on down here, and yesterday's low was holding. We were really coming to a low right here that we were having trouble breaking through, which did not surprised me at that time of the morning, especially because of the fact that we had this big move up yesterday, and then we had this big retracement back down here today. I was happy to kind of, okay, you know what? I can get out over here. Let me take some money off the table and let me see whether or not I can get back in at a better price. And I have been waiting all morning to potentially get back in at a better price. And this is the Russell 2000, and we're going to be taking a look at that again in a second. We'll see what it's doing and how it's trading right this second. So I just wanted to see this. So if you recall, okay, we were short. I took out, just small profits, almost essentially a break even, made a couple of bucks on the first one, which was really the entry I chased. I was happy to get out of that one. Then the other one, which was a much better entry, I made some money on, but seeing the activity this morning. But more importantly, it was this move yesterday afternoon that kind of concerned me, because now I had to make a move all the way down here just to get back to yesterday's low and give me a chance to even make some money. And then I really would have had to continue this move, over one day. Maybe even if this continues into tomorrow, if this move continues to move down. But remember, we're getting close. Today's Thursday. We're getting close to the end of the week. I start to get uncomfortable when you hold a position on a longer term chart. Now we're Thursday, so now I know already my hand is going to be forced by tomorrow afternoon at some point in time, late in the afternoon, that I'm going to have to get out. So, I'm being a little more cautious on my 4 hour, on a 4 hour entry. So, that's kind of how it worked out, and it was fine. So as you can see, I took some small profits early this morning. The area held, doesn't surprise me. I still have, if you look at the 4 hour chart, I still have a short bias. Okay, but we're really consolidating right now. And again, I'm very concerned. I don't want to say concerned, but I've observed, and therefore I'm going to be very cautious, that in the afternoons over most of this week, the US indexes have had a tendency to kind of squeeze a little bit higher. I think a lot of people are short. We're at the top ends of ranges in all the indexes. A lot of people are short, and they've been waiting for it to go down, me included. Now, I'm not short right this second, but I have a definite short bias. But my bias means nothing when it comes to the timing in the market and actually learning how and when to put on a trade. My particular bias is irrelevant because timing is what's important in the market at all times. When you're a trader, timing is key. Overall bias is helpful, or sometimes it stops you from doing things. I'm very, very cautious right now. So you could look at, as we said, when I looked at the 1 hour charts earlier this morning, and I'm saying to myself, yesterday's low. This was before we had this little spike down, right? Okay, so yesterday's low, having it taken out, thinking maybe a time to go long. I'm not going long. Okay, when I have, even though we have this move here, I'm not going long when I have such a short bias. Okay, we just have to find a better place to get in. So, and actually, we may just be finding a better place to get in right now. We have a trend line in right here. This is the 1 hour chart. It is 10:08. We just had some news. Let it digest, and let's just see what goes on. So I may be looking for another entry somewhere up in this area. Okay, figuring that today's high is in, but you know what? We had a move up, a big move down, and now we're back kind of, right into the middle of the day. So got to be a little bit careful right now, and I am definitely suspect as to exactly which way this is going to move. So I did get out, made some profits. Let me go back to something else that I just tried to do. Okay. And I, going back again to the S&P. Let me bring it back to the 15-minute and show you a way to trade, but, also being a little skeptical. Very, very careful over here in this area. This is the 15-minute. I did put on now, this is something else I want to show you. Okay. You don't always necessarily have to risk. This is very important. You always, sometimes the market is not setting up exactly the way we want to see it. Okay. And so what I mean by that is, we have certain criteria on how we do amazing trader trades in particular. And the idea is to locate high percentage trades and use a 1 1/8 or 1 1/4 to 1 risk reward ratio and risk our 0.25% of the account. Okay. But you know what? There are times when those setups are just not there, and maybe we're forced to, if you want to trade, kind of look for different areas using the lines in a slightly different way, maybe more even of just like a basic support and resistance. But it happens, so let me open this up a little bit and show you what I did. But then I got right out. Okay. I lost a couple of bucks, but I just wanted you to see what was going on. So I had a short bias S&P, excuse me, in the Russell 2000. Excuse me. I did this. Let me go back. Excuse me. I meant the S&P. Okay. And let me show you what we had here. Okay. Now remember, we have the high before the low. Okay. I was very concerned that this is why, again, anybody who tells you that you can be a day trader, meaning even if you're using a 5 or a 15 minute, I'm not talking about 1 minute, 1 minute charts, okay, little scalpers, okay. I'm talking about being, using at least a 5 minute. I've already made my preference known that I like the 15-minute charts for day trades, okay. However, if you aren't aware of the bigger picture, I'm going to stress this on every call because I got to make sure everybody understands this. If you're not looking ahead at the bigger picture, all right, to at least get a sense of the overall or wind at your back or wind against you kind of a sense, okay, then you're not doing yourself a good service. All right. So why is that? So here's the S&P 500. And I want to go up a little bit. Now you're looking here. So what's going on here, okay? Big move down, retracement up, set a blue line, big move down. Okay, set a line. Made this line right here a very, very, very key line. Okay, no question about it. But we had some conflicting signals. Why? Well, first of all, we made a move up to here. We came back down. We set a directional indicator. All right. Now, why wouldn't I just go long on the directional indicator? Because look at this. Let me open it up. Very important. This is how you guys, it's very important that you understand exactly what these charts, and how the lines, what they're showing you. Okay. Remember, okay, this line was not confirmed until the close of this candle, of the following candle. Okay. This was an unconfirmed line. When this line started down here, it started unconfirmed. It only confirmed at the close of this candle. Well, this candle closed at 41.29.31. Okay, so which is really kind of right up in this area. Okay, hold on, 41.31. Really kind of excuse me 1 second, guys. All right about that. Okay, right around in this area. So a couple of things here. We had a high here, which we know we're building a directional indicator in this direction. We already have another line in. So we're squeezing a little bit here. All right. So I'm a little concerned. So what did I do? When we did get up to this line and I waited, but I already knew, by looking at my longer term charts. So let me show you this one. This one's very important. I'm sorry. I was looking at this earlier. So this is the S&P 500. I want you to see this. Okay. Look, here's the 4-hour chart. And sometimes you got to tighten things up to take a look. But look what's happening on the 4-hour chart. Look at this trend line, okay, that's been built up here. This is so not only do we have a big move up, move down, right? Up, down, new high, low, new high, starting to work our way down. However, look how we're compressing in this area, right? So we want to be short, all right? We wanted to be short up in this area, okay? But now we're coming down into key area. What are we coming down into? A low right here. Okay, a key low before the high. So we're heading down here, and we have a trend line. And by the way, look how it just came down and it touched the trend line, stopped right on our trend line, and now proceeded its move up. So I was very, very cautious. So while I wanted to be short based on what was going on here, you have to look at the longer term picture. Okay, I hope you guys are seeing this. Just so you know, so while the 15-minute chart on the S&P is looks like crap, right? And even though we had this move up for a move down, I knew that this bottom over here was a tough bottom. Now, without looking at the 4-hour chart, right? Without looking, this is what I'm saying, without looking at the 4-hour chart, you see a move like this, and then this, and like this, you think that this thing is just going to continue. And so your bias is by looking at this chart, you're buying it, and look how people got caught. All right. Look how important it is that people got caught. So if you're a day trader and you're looking at your 15-minute charts and this is what you're trading, right? And if you didn't look ahead to the 4-hour chart and see that you're in a big uptrend and this was just a retracement and you're coming into a very, very key area, you get stuck going short at a very key area. Now, is that enough for me to go long? I have a bias of going short. So I'm skeptical about going long. So what did I do? Is I waited. All right, this is important. And I lost, by the way, I lost a little money here. It's not, but that's okay. Look, I lost $15. It was nothing. Why did I do that? Because I waited till this got here. Okay. I said to myself, the low very well could be in for right now, but I have my bias short, but the low could be in only because of what I saw on the 4-hour chart. I know I was in a major area. So I'm concerned about continuing a short down here and getting caught. All right. However, I was not going long. All right. I have a big bias in my head right now. This big move down. I would not, after this move down, after my bias, I was not looking to go long. So what did I do? Right when we got up here, I put on a half of a lot, which is nothing. Okay. And I risked a couple of points. So I got in at 41.30.56, literally just a half of a lot. I was only going to risk a couple of points. I got out at 41.33.59. Okay, so I lost literally 3 points. That's it. I put on half a lot. What was I looking for? I was looking for a very big risk reward return. Okay, I was not because, hear me out. All right, this is important. Okay, because I was worried that the bottom was put in, and because it seemed to me very possible that we were going to now push higher and squeeze higher. All right. I was not ready to go long. I used this line to go short, but I said to myself, you know what? Because of this power up, I didn't want to risk a full position. And I didn't want to risk my normal 0.25% on this line holding. But I said to myself, I could put on a small position. All right. If the line holds, I get a move back down here. And I'm talking about a 5-1 or 6-1 return. All right, on this. So that's what I was looking at. But I was not going to stay in this trade if it broke higher than here. It broke a little higher. All right. It took me out. Well, I got out. I didn't even have to stop. I had to stop loss higher, but I was manually watching this trade because once it broke out and started up, I got out. I didn't want to ask any more. I didn't want to ask any more questions. All right. That my theory, my thinking was wrong. For a minute there, it looked like I was a dope, okay, because it moved up only to start coming back down. But no, but then it came in. Now it's building its third line, starting its move up. So where it is right now, right in the middle of the day's range. Okay, so I can't tell you what to do here. My point is that you don't always have to risk your full amount unless it's a proven, amazing trade with the odds on your side. Right now, because I had conflicting signals. Let me just check, see if anybody is asking any questions. Hold on. No, yet. Okay. Because I had conflicting signals and because that 4-hour chart, which is a key chart, and we know that lines on a 4-hour chart are going to be more important than lines on a 15-minute chart. Any type of technical analysis that you do, where whatever analysis you're doing, whether it's a Fibonacci or it's a support resistance or it's a moving whatever it is, okay, it's hang on a second, I'm sorry. I'm sorry, 1 second, guys. I have to just respond to a quick message. I'm sorry. My apologies. Okay. All right. Sorry about that, guys. Okay. Where was I? Where was I? Uh, Oh, so I think if this is where I left it, exactly, is that unless you see a real amazing trader setup, and we have 4 basic setups that we use that we're comfortable with, where everything is in line, then you could just use this as a support or resistance. And what I was saying before is that any kind of technical analysis, the larger the time frame, the more important those lines become. Why is that? It's because more people who trade are looking at the larger time frames. As you move up in time frames, there are more people out there that are looking at that for their technical analysis. Okay, not everybody trades off of a 5 or 15 minute chart like we tend to do during the day here. A lot of people trade off of daily charts, okay, 4-hour charts when they're getting into positions. Depending on not us, not frequent traders, swing traders could even get into a trade on a daily chart. Okay, and hold on to a swing trader. You can hold on to a trade 3-4 days, a week, if you're a swing trader. Not if you're trading prop money. Obviously, we have to be out of our trades on Friday afternoon. I hope that makes sense to everybody. So, you have to, let me go back. All right. You have to respect 4-hour charts. And this 4-hour chart tells you that right around in this area, all right, if you didn't make your money short by now, all right, then you got to wait for a better opportunity. Now, are you ready to go long over here? Some people would. Some people would. But what I'm seeing on a 4-hour chart is, again, similar to the Russell 2000 from yesterday. And I'll go back and take a look at that again for you also. Similar to that, I think the high of the week is in. Okay, this is the 4-hour chart. This is the week. We have 3 lines now in pushing down, pushing down, pushing down. Okay, we already took out this line. However, this line is not right the low before the high. Right, the low before the high is this line. Right. Please understand the difference. Okay. Okay. This line is not the low before the high. Okay. Hang on a second. All right. So, point being is that I wasn't ready to go long, but if you were short, you had to be out over here and wait for a better area to get short, at least on the 4-hour chart. And if you were trading off the 15-minute chart, like a lot of retail traders do, and you're looking at this pattern down without looking at what's going on at the 4-hour chart, you were not prepared for this move. Now, truthfully, I don't want to say a better trader than me, but somebody who can, be even less. Look, I have my opinions. Sometimes it's hard to break away from a bias. If you have a bias in the market, I think it's an educated bias. I follow a lot of economics. I follow a lot of politics. I follow a lot of business news. I have opinions on what's going on. We have to get into them now. Economically and the overall picture of the economy and where we're heading and things like that. So I got a bias. I have a short bias. I have a long bias. I think I've mentioned on gold and silver, and I have a short bias on all of the indexes in the U.S. And those are very hard biases that I have because I think those are I just think that that's where we're heading over the next couple of months or maybe even longer is short indexes, long metals. However, that doesn't, it doesn't make a trade. Okay. You still have to, have timing and you still have to know when to get in and how to leverage and protect your position and then get out and take your profits because everything goes through, through swings. So, I have a bias, as I told you, I have a bias, short indexes, long metals. That's my bias every day. It's very difficult for me to short the metals right now or to go long on the indexes. And so it's frustrating when you have a day like yesterday where those indexes kind of, they're squeezing people up. Now, fortunately, I'm not in, I'm flat. So it's fine. And yesterday I had a stop loss, well, as I showed you, well within reason. And for those of you who may have joined the call late, we talked about, let's just go back. All right. And I'm going to hold on time. It's 10:24. I'm going to see if we can look and find a trade in a minute. But I just want to make sure that I review once again for everybody. I see a couple of people late joined the call. So I just wanted you to see once again, okay, how I handle this trade. And if you get in on a longer term chart, you can't be afraid to reevaluate a situation. All right, if you're going to be in a trade for a day or 2 days, these markets are very volatile. Well, the volatility is down, but the markets are very unsure. Okay, so they're back and forth, back and forth. Very, very difficult. There's news, and every bit of news that comes out from everywhere, moves the markets in the short period of time. So it's kind of been a very difficult trading environment. But so let's just talk about it yesterday. Okay, so we were talking about the fact that I did get short. Okay, here's the 4-hour chart, and we did get short. The problem was, as I showed you, I didn't love, remember I talked about it, I didn't love the pit I got in. I said these were better than 50-50 charts. My bias was definitely to the short side, as you know. What I didn't like for the 1-hour chart is yesterday. Now, again, my stop loss was never in danger on any of these trades. However, I did not like the way the markets did this squeeze up again, starting from midday yesterday to the close, right up to the close of the day. I did not like that move at all. So even though my trade was still intact, I was down a little bit of money. I wasn't getting out because my stop was still in place. I wasn't moving the stop. My thesis was that the high of the week had been in, and that trade was protected by that. And however, this move up, when this broke, see, down, down, and when this move up and we took out this swing right here, okay, I'm concerned. And I got the opportunity overnight, and we were still well in the trade, but I didn't like this move at all. Okay, so when I had an opportunity, when I got up this morning and I kind of logged on, see what I was doing, and I see that we're bouncing around down here at the 1 hour, and this area was holding, which was right around yesterday's low, and I saw my positions, which were pretty much out of money yesterday for most of the afternoon, whatever, especially my, the one entry that I rushed a little bit, and I saw what was going on, and I said, you know what, this morning we got news coming up. I was really having trouble breaking through. I gave it an opportunity for a little while to see if we could break through yesterday's low and continue to move down. And I still expect, by the way, this move to come down here. I still would be looking for an area to go short. And I may be getting close to it. And we're going to take a look at that in a second. This is the 1 hour chart. It's 10:27, but we're having a really strong rally right this second. So I'm going to be, I'm not. Why rush into this candle? All right, why rush? First of all, this is a key line right here. All right, that's my key line. So I'm not rushing into this candle. See if this candle holds on the 1 hour. Can we get a 10? Let's just see. 15-minute. Let's just see. What does 15-minute look like? Okay, 15 minutes. Right around here. Move down, up, down. Well, we're getting close to an area. But once again, I'm on guard right now. Okay, I'm on guard because of the way these indexes have had these late afternoon pushes. So does everybody understand what I did? So it was not important. When I saw this yesterday, this price action, all right, I was into this trade figuring this move would come down. I had no problem with it retracing, figuring it would continue its move down. But this late afternoon, now I didn't get out of the trade because I was still within my stop loss, but I was not happy with this move as far as my thesis as to why I got into the trade to begin with. Okay, so when I saw down here this morning, just to repeat, bouncing off the 1 hour and couldn't break through it for a while, to me, that shifted my risk. All right. What it told me is I don't want to be, the risk is now longer be, is if you're short here, I got to break through this line, which I'm having trouble doing. Whereas if it reverses a little bit, there's clear room to come back up. So when you're down here, see up here is the area to short. Down here, if you're now in if you're short, all right, now it's one thing if you were short from up here, maybe you take off half and you can see if this thing will break through. All right. But, I was not sure. I was just break even up a couple of bucks over here. So at this point, after all the activity from yesterday afternoon, overnight into this morning, and now this 1 hour chart holding again, all right, I'm like, you know what? Let's say goodbye for right now and wait for a better entry. And I'm actually going to be looking for a better entry right now, but I'm very cautious. Let's just see if this thing is going to move up a little bit. Well, where are the markets right now? Russell 2000 is almost even for the day. So I'm going to watch this very, very carefully. Let me just see if there's any questions. No questions. Okay. So I'm hoping everybody understands what happened. I got out of those trades, as I said, for small profits. I'm happy to take small profits. That was it. I showed you once again, going back to the S&P this morning, what I tried to do on a 15-minute chart. Remember my thinking, okay? 4 hours, okay? I know I'm repeating this stuff, but you guys, please, you have to understand it. Even though we're day traders, you have to look ahead of you to see where the prevailing wind is and what's going on. And so if you're short, and based on a 15-minute, if you're still looking to go short or initiate a short over here, now it's one thing if you're short up here, okay, and you want to give this, time, and you're willing to risk this move back up, but you can't be putting on a short, even on a 15-minute chart, right around in this area. So if you're not looking at this, then, you're gonna, the odds are just against you. All right. And that this is where they get retail traders. This is one area quickly where they get retail traders. Look at this move down, 15-minute chart. Boom, 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 down. Look how ugly this looks. People are, getting short. People want to be short to begin with, right? People want to be short. They got them short, and this is how they squeeze them out. So here's a 15-minute chart right now. So if I was going to say to myself, okay, I'm now looking for an area, okay, I'm cautious, but I'm looking for an area where maybe I could get back in. Now, first thing you're going to look for today is you're going to look. All right. See, right now I'm not going long. So what do we do from here? Okay. I'm not going long right this second. All right. You heard my bias. My bias is let's potentially look for a short at this point in time. Okay. Well, if you look at the 1 hour chart, I'm smack in the middle of the day. So I can't tell you right this second which way it's going to go. And if anybody tells you they know right this second which way this is going to go, good luck. I mean, you could throw a dart or you could take a guess and you'll be right 50% of the time. We're smack in the middle of the day. We have a high, we have a low, and we're smack in the middle of the day. Where's it going to go from here? Your guess is good as mine. All right. But if I want to trade the S&P, then I'm looking to get a hint. Let's just go down to the 15-minute because right now we're in a move up. Okay. I'm not looking to go long. So what time is it? It's 10:33. So we put in a high right here in this move so far on the 15-minute. We put a high over here. Excellent. And now if we don't take out this high within the next 12 minutes, which, let's see, we're getting very close. If we don't take out this high, then well, let's just see. This thing is well, there it goes. So much for that. Okay. So there you go. And what do we learn? What did we learn from this? Okay. A couple of things. Okay. Number one, we don't trade off of unconfirmed lines, right? Because that's all it was. It was an unconfirmed line. We never use an unconfirmed line as to put a stop above or below. Okay, it's sometimes it looks obvious, but we don't use an unconfirmed line. Please wait, be patient, wait for a confirmation. So right now we are in the middle of the day. Here's the S&P. If you want to trade it, if you wanted to go long, right, you have to put your stop loss, kind of down here. Unless you wanted to go, maybe you can look at the 5 minute. I don't love it. Where could you get in on a 5 minute? You could get in on a 5 minute and you could put a stop below here. Okay. 41.34 to go long. All right. We took out this line, the previous high. Maybe you could go long over here, but you'd have to be out by here. So for those of you who, don't have that short bias, and I do, I just do. Okay. I have a short bias. Okay. This is not a terrible trade on a 5 minute chart right here. All right. Me personally, all right, at this point, I would be looking more for a short myself. To me, I missed a lot of this move already. There's still a little bit of room. If you did put on a buy, and again, I don't love the 5 minute charts, but if you did put on a buy, just see some, just to show you how to use this. See, even if I put on a buy and put a stop over there, I have to take out this line. This is look at what we have to do. All right. Yes, at the very worst, you have to put your stop loss here, okay, below here. That means you take profit for a 1-to-1 risk reward, or 1 1/8 to risk reward is this line right here, which keeps moving, which means we have to take out this line. Okay. And if we don't get in soon or on a move back here, then you have to take out this line as well. I don't want to have to take out those lines to make my money. Okay. I don't want to. So I'm going to be looking for an area up here. And then now we have, I'm going to be looking for an area up here potentially to go short. Now, I'm not going to go short on a 5 minute chart. I don't even want to look at the 5 minutes. Sorry, guys. Okay. I'm just very uncomfortable looking at 5 minute charts. I don't trust them in markets like this. Let me just check any questions. No questions. You guys are quiet today. Okay. If you guys see anything out there that looks very tradable, let me know. I'm looking for a setup here to potentially go short on the S&P. Let's just take a look at what's going on. Markets are very, dollar index. Hold on. Just when you see a market like this, guys, okay, they're just tough. Look what's. So let's just see if we can find something that is tradable right now. If anybody has any questions, we'll take a look. Let's see what gold is doing. Gold is stepping up a little bit. Once again, let's just see what's ahead of us in gold. And this is why we're not going long gold right now. It's my bias. Okay. I got to take out these lines. Okay. Before I start to get long on gold again, I want to take out these lines. Either get long somewhere up here or take out these lines, get a little retracement, and then come back. Okay, this is a 4-hour chart. And once again, I'm not getting into a trade on a 4-hour chart, but you got to be careful. Okay, you want to go short, you want to go long gold, you got to know this is where you are on a 4-hour chart. Let's look at a 1 hour. See if there's any room on a 1 hour. All right, you want to be long, popping up, into here, right this second. No, I'm just not comfortable here either. All right. No, smack in the middle, guys. Everything is smack in the middle. Just see what else is doing. Let's look at dollar, see NASDAQ. I am dying to get short. A second, guys. $9, 13, 60. Okay, guys, I just went short. I'm dying to go short. Okay, I put on a small lot. Okay. Once again, just move my stop loss. Hang on. Let's go see. And once again, I'm trying to do this for a bigger risk reward. Hold on, move this up here. Sorry. I'm not going to give it a lot of room. As a matter of fact, hold on, I must move that stop loss. I brought it down too far, so hang on. Let's see for a second. I just want to see where that brings me. Probably not going to leave it here, guys, but hang on a second. Okay. And I have my stop above this blue line. I only put on a half a lot. I am probably not going to leave it. All right, this is an emergency stop right now. Hold on, let me just see how far it is. Bear with me. $280. I am not going to leave the stop up here right now. I'll tell you that right now. I am not going to let it hit the stop. Okay. I want to see if we can get another drop back down here. I am not going to let it. As if this candle closes higher or comes back, I'm out. Okay. There's no way I'm going to give it that much room. Any questions? All right. Now, all I'm doing here, guys, right? All I'm doing here, there is no amazing trade or trade right this second that I'm looking at. Markets are just way too choppy. As I mentioned, I have a bias on a short. Okay. On everything, on the indexes, and so we'll see what happens here. All right. But I'm not gonna, I don't know how much I'm gonna hang around. Let's see some here, just so you guys can see what I'm doing. Any questions? Okay, while I'm doing this trade. Again, this all this is I have a short bias, but I'm conspicuously I don't like the way the Nasdaq has any of these indexes. So I'm just going to be really cautious today. So I'm not risking a full position. All right. As a matter of fact, hang on a second. Excuse me, tired this morning. Any questions, guys? Or anybody see anything out there that's happening while we look at this? Okay. Time's at 10:42. See what's going on with the other index. I like to see what's going on also. So this is the Nasdaq, S&P moving up, Russell 2000 moving up. Guys, not much going, very choppy. Okay, I'm not going to make up trades for you. Very choppy. This is what I'm doing. For myself. Small risk though. That's the kind of market it is. I am not going to risk a lot of money on any one trade right this second. Too choppy. $10.43. See if there's anything else going on of interest. No, those choppy. Very tempted to put on a short here on the Russell 2000 again also. Up in this area. NASDAQ is down only 52.50. Futures are down 52 points, 0.38%. Okay. I hang with this for a little bit, guys. You know, I'm gonna if this candle high, I'm out if this candle breaks higher. Okay, that's where I'm gonna get out. I'm telling you now, I'm not gonna put my stop loss on the computer over there. All right. But I am telling you right now that I'm going to be watching this. And if this candle gets taken out right here, all right, I am out. I'm just not putting my stop loss there right this second. All right. I don't trust brokers. Any questions? Guys are quiet today. Boom, boom, boom. Time is at 10:45. I'm telling you, there's, you know, they're squeezing these indexes. One second, guys. No, it's a little boring. But let's see. S&P is driving higher. You know, gotta be. I don't know. Pushing. 50, huh? I don't like what's going on here. S&P pushing higher. Any questions, anybody? Boring. Any questions, guys? While I kind of watch and monitor this trade. I said, guys, I'm just kind of scouting around looking for some other things here while we're doing this. Any questions, anybody? There's really nothing going on to look at right this second. I don't like the way this thing is grinding up. It's annoying. Questions? Anybody? Time's at 10:49. This thing, yeah, it's grinding higher, grinding higher. Bum, bum, bum. Mhm. We give it a little bit more room. Told you this is a key area right up here. If it takes out this high, I'm going to get out. Wouldn't surprise me if it does. S&P still moving up. Hold on. Russell 2000 maybe making a move down. So we're going to give it a little bit more room. This candle is where's the high on this? Is questions? Anybody? Hey, question. Thank you. Thank you. Euro yen on the 1 hour. Short base. Okay. Thank you for your question. Let's just take a look here. Wait, hold on a second. Wait, let me put a. I can't do this. Hold on one second, guys. Can't do both. So let me. I noticed the takeout. So hold on. This thing is grinding higher, guys. So I'm out. Take a small loss. And let's go take a look. I don't like the S&P's grinding higher. NASDAQ's grind higher. I'm not going long. So let's just take a look. Euro yen. Okay. AT short signal. Euro yen on the 1 hour. Well, clearly the 15-minute is dumping. Let's take a look at the 1 hour. Coming down, coming down. Coming down. Short based on a break of the 1 hour. Up line. If you're short from up here, that's great. Euro yen, you know, potential AT short signal on the 1 hour. You know, you're going to be short at the high of the day, right? Hang on. I would just be, kind of careful, I don't know where your expectation is. I don't see when you give me information like that, which is helpful. It's a question of position size. So it's hard for me to evaluate. Okay. In that my questions would be position size, and you don't have to give me this information, but these are things that I would be considering. Okay. My position size, obviously, where my take profit is. Oh, okay. Got potential. Okay. I got you. Excellent. Okay. I'm glad we're talking the same thing. Yes. Okay. Very good. Okay. Because clearly you got to be really careful right around here. Okay. These are yesterday's lows. All right, this is not really hard. We had yesterday's lows at 147.03, so we're really 10 pips away from we're on today's lows, yesterday's lows. Okay, are we going to take out yesterday's lows? We're moving higher. I don't know. So you got to be. You're right. It's a potential trade setting up, but we're not there. We're not there yet. We're not putting on a short right here at this position. Clearly, okay. Let's just see. Watch what happens. Sure enough. Okay. Gotcha. You're short. Okay. On a 1 hour trend line, support of 147.38. Gotcha. On euro yen. That's where you're short at. Okay. Just take a look. 1 hour. Trend line at 147.38. Excellent trade. Okay, good. Excellent trade. And where's your okay? So you're short based on that. Okay. Curious. Do you have a style? Help me out here just to see how you're whether you know how you're using our AT thinking or not, which is fine. Okay, because so just curious. Okay, where is your stop, and do you have a take profit target? Your entry is excellent. Clearly, your entry is excellent. But now we're here. So if you could, are you just do you monitor your trade at this point? Do you manage this trade based on your other technical analysis? Okay, or do you have a target at which to get out and a target stop? So I'm just curious if you want to share that information. It would help me evaluate a little bit better. But clearly, anywhere short up here was excellent. We had yesterday's high. We hit it again once. We hit it again almost twice, creating directional indicator up here, move down, very strong move down. I see an open area above the high of the day. A target is based on the low 145.85. Oh, all right. You're coming all the way down. Okay. You're coming down here. Okay. Okay. Excellent. And your high is above the high of the day. Okay. Excellent. So that's a pretty good risk reward ratio, right? 147. So if you're in 147.38, target is 145.85. All right. So you're in here for a long period of time. So I guess my first thing I'm going to ask you is that you're not trading, at least for this, right? So you're not trading a prop account, right? Or if you are, you're trading at one of the few places that let you hold a trade over the weekend. So I'm taking it that this is not a prop account, which is fine. Nothing wrong with that. So yeah, I like that. I like that trade. I do like that trade. But I can't, get into that trade. Hold on, and look at me like a jerk, just to show you, what a jerk. I said I'm going to give it to this high, right, to break the high. Didn't even do it. And 146, and where did I get out at? Let's see. I got out at 13,064. I got in at 13,038. I would be very, very close to break even right now if I would have held on to this position. All right. That's what happens when you trade in a choppy market. Grand total minus $63 today. Just so you know, guys, just to give you a little. I'll show you something. So, oops. Hold on. All right. So this is the result. Okay. So this is the results just for this month so far. Yeah. Not in one and almost 1.25% for the month. Okay. April 20th. It's been a tough month. Let's see something. Let me go back. Sorry, guys. Just some smoke. Oh, shit. Where is it? Hold on. A second. Somewhere. Oh. Let's go back. All right. There's a problem. So hold on a second, guys. 1 second. I got something locked up in here somewhere. Hold on. That's not good. Something is locked up. I can't see it. Let's try this. Hold on. Hang on. Sorry about this, guys. I'm just try this again. There we go. Okay. Had to clear that. I'm sorry. Had to clear that. So where were we? Where were we? Okay. All right. What time is it? It's 11 o'clock. And as you can see, not a lot going on. We're stuck here. We're stuck here. Again, as far as today's concerned, I'm going to keep an eye on it. I still have a bias short, but I'm going to watch for that afternoon. Let's just see what's going on here. The pound. It's one of those days, guys. It's one of those days. Just take a look at the dollar index just to get a feel. See, we're just in a we're just in a nice little consolidation mode. When you're in a consolidation mode like this, you can only try and pick tops and bottoms. That's it. I don't see anything else. Any other questions? Anybody? Hold on a second. We should get down to the bottom here. It is a proper cap. Use AT to evaluate risk. Excellent, excellent. That's good. It is a proper count. You can hold the trade over the weekend. You pay, okay. I guess there's a couple of ways to do it. There's one or two firms that you can hold the trade over a weekend for no cost, and then there are a few firms out there. I think if you pay an upcharge, is I think what they do to allow you to use a trade to hold a trade over the weekend. Me personally, I don't, but if you're managing your risk carefully and you're not overly exposed over weekend, I have no problem with it. This particular account is a prop account that I use here for our demos and for our webinars. So I can't hold this account over the course of a weekend. I don't have that option. Plus, me anyway, I get out. I like getting out. So look how this would have worked out so far on the Nasdaq. I think this is coming down. All right, that's it for me today, guys. Have a great weekend, everybody. We'll see you again on Monday. Excuse me, Monday. Hello, it's not the weekend. Today's Thursday. I'm sorry, I'm getting ahead of myself. It's only because I'm playing golf tomorrow afternoon. So in my head, the weekend is about to start. But no, I'll be here tomorrow morning, and I'm going to be playing golf afterwards. So I'll be here tomorrow morning to do the show. Hopefully we have a little bit more activity tomorrow. Again, my biases are still long metals if you find the right opportunity, and still short the indexes. I'm just taking a look here, but still want to be short. But you know what? Once again, I'm gonna keep an eye out for that afternoon index squeeze, which is what's been happening the last few days. All right, guys. Anyway, thanks very much. Have a great weekend. I'm sorry. Got a lot going on here. I will see you tomorrow morning at 10 o'clock. Have a good day.